future. We're talking real money.
You know, I was just curious. We haven't talked about this in a long time, but I was just curious because I heard a commercial for a kind of a payday loan company or a personal loan, no signature company, and I wanted to see what the rates were, the interest rates.
How much?
Well, I was just looking at NerdWallet, and there were a couple of options there. One of them has an estimated annual percentage rate, APR, of 160%. The other is just 91% to 250%.
You know,
Wow.
and you wonder how people get stuck and never get out of it.
At 250%?
Yeah, right. I mean,
Yeah.
you know, okay, and famously, for those who don't know this, I once interviewed the guy who ran the Payday Loan Association in the great state of Washington. I think he's still there.
Is he?
And it was not a pleasant experience for him. And actually, I asked him how many people get a payday loan and then end up having to get another and, you know, sort of get stuck. And he told me, oh, we don't keep track of that number.
Oh,
which
sure
I didn't think
they
was.
do.
But here's the other thing. I had a quote. I was waiting for him to say, our customers don't complain about the deal, that they don't. Because there'd been a consumer affairs person who'd said, that's true, but crack users don't complain about their dealers either. I used that quote.
Uh-huh. Oh, you did?
I did. On the air.
Did he walk
television.
off the set?
He pretty close. His face got very red. He got very angry. And my toughest critic, my mother, called me that night and called it cheap. Said that was a cheap.
Ooh, I think
shot.
that was a very good shot.
Anyway.
By the way, which state in the union has the highest payday loan rates on average? A little quiz for you. Pick a state in the union where you think they would have really ridiculously.
New Jersey.
No. Come on. Where's the
Florida?
Men, real men, real women, real. You know, if you're just pull yourself up by your bootstraps, darn it, and pay the loan.
I already said that the ones
Ready?
I think.
Deep
Texas.
in the
Really? Wow.
Texas.
Wow.
The average rate for a payday loan in Texas. This is according to CNBC a year and a half ago. Average 664%.
Don't they know? Like, doesn't that sound like usury to you? It's just like, it's so crazy. That's
usury. That's
that left usury and urban.
I don't even. Honestly, I can't
Yeah.
even think of a word to describe a number like that. So anyway, I heard that commercial. I had to comment on it.
They run it that's running every about 15 minutes.
Yeah, and
a lot.
And while some states have caps,
I think Washington does
in
or
the
doesn't.
the 30 to 40% range on small amounts. Yeah. You got to just wow.
I mean, and once you get, I stand by that. Once you get caught in that trap, very hard.
You can't get out. Not at 600% per year.
Borrow again. Yeah, right. I mean,
you're borrowing $100 and then you owe them $700 or $650. That is just poor people.
And you're borrowing ahead on the money that you would be getting in the payday situation.
I almost think it's better not to pay the landlord than to pay the 660% and become one of the maybe hopefully temporarily homeless people in the world.
Let's not be homeless.
It's just sad.
Yeah.
It's just
anyway.
But that people they're preying on the
I know. The bottom
poorest people in the country. They're preying on them. Oh, it's so awful. Anyway, 855-935-TALK is our number to talk money, and so we're going from the very poorest stepping up to those who can afford to trade the stock market. Because in this hour, I want to talk a little bit about an article that I saw in the Wall Street Journal. I think Tom saw it also. That was got by a guy we really respect, who's a Wall Street Journal writer, obviously, James McIntosh.
Mm-hmm. I like his stuff. Yeah,
I do. But this article was a little weird. The headline was "Stocks are forever. That doesn't mean now is the time to buy." Well, what does that mean then, James?
Now remember, he doesn't write the headlines. This is something other people. Well, I'm not a headline writer. I just write the article. But the article is a little confusing. And just to take a step back, the number one question we get from all of you is, I just came into this money. What do I do with it now? So this plays perfectly into that because, like, well, should I invest it now? Et cetera, et cetera. Perfect.
So we're going to get to the specifics of this and what we believe you should do, because we believe that part about the markets likely being forever. 855-935-TALK.
Tom and Don are talking real money.
In medicine, a second opinion might save your life. With investing, a second opinion might save your future. The trick is getting one without a high-pressure sales pitch. Well, I'm Don McDonald, and if you've been listening to Talking Real Money, you know that our goal is to help everyone create a brighter future by investing and managing money better. That's why, in addition to helping everyone on our show and podcast, we are also committed to making our 100% fiduciary advisors at Appella available to help everyone make the best financial decisions based on science. So if you're being pitched a financial product or a system, make sure you get a second opinion with no cost, no obligation, and no annoying sales pitch by going to TalkingRealMoney.com or call 800-386-3004. That's 800-386-3004 or TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
When is the right time to buy into the stock market? Is there a right time to buy? Apparently, James McIntosh of the Wall Street Journal thinks you shouldn't be buying it sometime and you should be buying at others, because basically he said that, buying at the wrong time can mean making less than buying at the right time. Is that what he said?
Kinda. It's a very difficult article to parse.
To parse, yeah.
Yeah. Okay. So, but let's just give a concrete example that maybe helps, because he points out that if you bought U.S. stocks in January 1973, before the Arab oil embargo, and
he means the S&P 500.
Correct. Yeah.
Yeah.
You've made 6.6% a year in the basically half century since, right?
Yep.
That's
I verified that number.
That's after
right.
inflation.
After inflation.
So if you include inflation, you're closer back to that 10% mark, including dividends, right? So that's not bad. But if you had been like, well, I'll just wait till this oil thing's over and wait till Nixon's out of office, et cetera, get things cleaned up in the country a little bit. So I'll wait till, let's say, the autumn of 1974. I believe Mr. Nixon left the White House in August of 1974. Stocks had reached their low. So if you bought then, the next half century, instead of making 6.6% a year before after inflation, 8.5% a year you made, which is around 2% more per year annualized. So you look like a genius. That's really smart.
Yeah, but there's a flaw in his thinking, and that is very few people invest once and then don't ever invest again. So if you invested on January 1st, 73, $10,000, and then you invested again on January 1st, 74, $10,000, and you did it again and again and again and again, you're going to get in both high and low.
This is a great point, Don, but a lot of people do call us. They come into money from various methods. They sold something, they inherited something happened in their life, so they came into a windfall. And they're trying to decide, well, so I have this windfall. I don't want to buy now because aren't stocks at like near record highs? I wouldn't want to buy it. I mean, and they are, right? The S&P 500 is very close to its record high.
Yeah, but wait, wasn't the S&P 500 at a record high in 2007? And wasn't the S&P 500 at a record high in 1999? Wasn't the S&P 500, along the way, hasn't every subsequent record high come on top of a previous record high?
I think our friends at Dimensional did a nice paper on this, looking at whether a record high is meaningful. And you correctly point out, it's really not. You said stocks are forever. You have to remember that the investment you make in stocks is really an investment in capitalism. It is investment in companies, right?
It's an investment in the economy.
Yeah,
exactly.
Right. So, and people have a tendency to forget that. They get rather like narrow. Well, look at no, what you're really saying is the economy will grow, companies will be more profitable, there'll be new companies that come along. I want to expose my money to those and make additional money, and it's worked for a long period of time. But still, this does not answer the question at hand, and that is when to invest in the stock market.
And the right time to invest in the stock market is when you have the money to invest in the stock market. That's the right time.
Yeah, and here's the thing. You made a very good point a few minutes ago. Most of us can come into a lump sum. It is investing every 2 weeks in our 401k. It is for some an annual amount you put into your IRA or your SEP IRA or something like that, so that you're sort of dollar cost averaging in, which also gives you the advantage of different pricing, right? So sometimes maybe look good, sometimes maybe not so good. And you really want to be buying things when they're not looking so good and the prices are down, right? I mean, after the oil embargo,
yeah, but that's all relative. That's so hard to. I mean, how far down is down? That's the other problem,
right? Nobody
So
knows.
you bought when you were at the all-time high in 2007, and then stocks went down 10%. Was that low enough to buy in again?
I guess.
No, you should have waited until it was down 50%.
I see. Or,
You see?
Or 2008. Wait till
But then it's down 50%, and you're thinking, well, if it's down 50, it may go down 60. So I think I'll wait till it's down 60, and then it goes back up, and you're going, I know it went up a little because it does that just to fool me, but it's going to go down again, so I'm going to wait.
One thing I can guarantee you about all this is people that take their money out and wait end up with less.
They have. Yeah. According to all the research done.
We don't know anybody who's been able to say, oh, I'll wait and then I'll jump back in. That approach, that market timing, if you will, has not worked.
855-935-8255 is our phone number, 855-935-TALK. And Steve, you're up. Welcome to the show.
Hi there.
Hey, Steve.
Listen to the show regularly. Love it. Here's my question, and I'm probably dumb as rocks here. So I used to work for a large aerospace company in the Northwest, unnamed.
No, we don't know who that is either.
If you're calling about the door, we don't have it. Okay. Just gonna put that out there right now.
But
I know a guy.
2 weeks in a row now.
I know. I think more like 3. But okay. Go ahead.
Separate discussion. But obviously, with the pension, I no longer work there. I am employed somewhere else. So I decided, in the genius that I am, that I would hold off on taking the pension. And I do the forecast of the lump sum versus the monthly. And, you know, I keep watching my lump sum go down, and I just calculated this morning, and it's gone down even further. And I would expect these annuities to have turned because of the interest rate. So am I just being stupid, or what is going on there? Why do I keep seeing the continual decrease? Understanding interest rates went up, therefore the bond funds went down. I get all that. Is that the only reason?
Well, okay. So fill in a little bit more here. First of all, how old are you?
I am 68.
Okay. And for one thing, I don't believe after 65, I could be wrong, but generally, after age 65, the pension, the annuity payout will not increase anymore. In other words, there's no reason to wait if you're going to take that.
For the monthly.
The monthly, but he's talking about the lump sum has gone down.
That has to do with interest
rates.
rates.
That has to do with the struck. Yeah, it's interest rates.
Yeah. And so
gotcha.
so let's see if they've run the number for the end of last year. They would not have yet, or have they?
They would not have run the 23 number yet, would be my guess. I don't know how often they run it. That nameless aerospace company. If they just run it once a year, then you haven't seen the 23 number. The 22 number would be terrible.
Yes, it would be.
Absolutely. But I just ran it this morning, and it changed from 3 months ago, and it continues to go down.
Okay, that may be still because of what happened with
delays
rates until fairly recently. I mean, here's the thing. Beyond that, are you an investor? Are you somebody that has money in stocks and bonds?
Yes. So
okay.
I've got other money.
Okay.
I don't need this right now, which is why I've waited. But, there's the question. I obviously gambled and lost. To a certain extent
You're timing the market. Stop it.
We just talked about this.
I don't want to be one of those. Don.
You are, though. You are. I'm sorry. You are. Think about it for a minute. You keep thinking, if I wait until just the right moment and take it out. Bing! No. If you're going to be an investor, you have no desire to take the monthly payout, and you're going to invest it eventually anyway. Invest it now. Maybe you'll do a better job than they're doing. That is actually possible. Some companies don't run their pensions very well. Others do, but you can do well.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
In our own ways,
finish our discussion.
In our own ways, we all become at times market timers because we think we can intuit things. We really do. We trust our intuition a lot, which is a flaw of our psychology.
Well, in a general sense, we're overconfident, right, about most things. But just to finish the thought with Steve. Okay, so because we didn't get to finish this. In a general sense, if you take the lump sum and you invest it, you end up with more money over the next 20 years. In a general sense, right? Because think about it. You should, because if you take the pension, it's a set amount, right? That's that. Inflation keeps going up, but if the money's invested, that grows, should keep up and do better than inflation. You end up with more money. But the reason I asked him whether he's an investor is, for many people that are not, you should just take the annuity. Why would you mess around with it? Why would you worry about the market and all the rest of it, things that are going to give you anxiety at a time when, frankly, we know people have more anxiety in retirement oftentimes than they had before it. So then in that case, you would just get the monthly payout, get over it, and realize that, maybe that's not going to be the best option, but it's going to be one that's going to provide you stability, less worry.
One of the most fascinating things about this whole concept of investing is the power, the value of the psychological component in the equation. And it doesn't lend itself to easy calculation. But I think it's bigger than the potential for returns or the protection from losses. I think our psychology plays more into any decision we're going to make, and it has to be the number one factor driving it. That's why we keep saying over and over and over again, your risk-taking profile is absolutely crucial to know before you ever consider a single investment. We're all going out there going, well, can I make a little more money? I just want to make a little more money. Well, yeah, you maybe can, but can you stand the pressure?
Yeah, and we learned a lot fairly recently in the spring of 2020, right, when the markets declined 30% in a very short period of time, and there were a lot of people who said, this is never going to end. I got to get my money out. There you learn. There you find out who you are around these sort of things. But, we have this free risk quiz that we offer. I think you should take it.
I think it's really wonderful. Helps. I think it's really well structured. Nothing is infallible, but it's going to give you a decent idea because it asks some probing questions and then tries to turn those into a calculation, into a spreadsheet of sorts.
Yeah, it kind of gives you a look at where maybe you should be invested. There's more things that go into your sort of stock to bond ratio, asset allocation than that, but it's a good place to start. So back to Steve. Yes, those numbers, those payout numbers have gone down because of what's happened with rates. That may turn a bit, but Don's exactly right. If this is a decision you're going to make, take the money out, invest it properly, build the right portfolio for the long haul, and get over the fact that it's a little different than it was a couple of years ago.
Yeah, and remember, if you're a long-term investor and you're comfortable with volatility, the data is really pretty compelling that stocks have had a very nice positive return after inflation. In fact, the article we were talking about earlier quotes some things some work of Jeremy Siegel, who's a professor at Wharton, who wrote the book called Stocks for the Long Run. And basically he says, if you hang on long enough, and that time period is 20 years,
it's about
is
16,
the
they
worst.
actually gave a number.
20 years is like the worst case scenario. If you hold for 20 years, you really wouldn't have we don't know about the future. You wouldn't have lost. Although it was fascinating in this article that some guy, a retired professor, said, wow, yeah, Jeremy Siegel went back to 1808, and in the 19th century, if you take everything into account, including Confederate bonds and stocks,
railroad bonds, and
you would have lost money over more than 20 years. Oh, come on. First off, no one should include the 19th century in any calculation.
That's a pretty different time. America was an emerging market then. That's a
and there were about 8 stocks. It was like
not a lot.
I'm
Southern
exaggerating.
And, the Central Pacific, and pretty
limited. And the markets were much more heavily manipulated back then.
Absolutely. Yep.
There were. I mean, this was I found fascinating from this article. One of the things that there was a huge market collapse after a fire in 1835 that wiped out the records of the New York insurance industry. I mean, that destroyed the industry because they burned. So, weird stuff happens. You can't add that into your equation. We'll be right back. 855-935-TALK.
Tom and Don are talking real money. Radio for a really great future. We're talking real money.
855. That means toll free, which is meaningless anywhere on the planet now. I don't know why we don't get rid of 800 and 855 and 877 numbers. I don't know
just be
why.
Any number. Right.
It's just any number. You could call us on just any random number.
Yep, we'll answer.
And it won't cost you anything. So, but we have 855-935-TALK now, so call it 855-935-8255. And by the way, if someone has an 800 number, it just tells you they've been around for a while.
A long while. Yeah.
Most of those were gone a long time ago. Talking again about buying stocks and all of those who say there is a right time and a wrong time to buy stocks, kind of like the implication of the James McIntosh article we're talking about in the Wall Street Journal. The implication is, you can buy better if you buy at the right time and do better if you buy at the right time. But I have 2 things, Tom, just 2 things that I want to really address as the meat of this issue. I want to go back to the fact that rarely, if ever, do we invest a large lump sum all at once in our life. It might happen sometimes, but generally speaking, most of us are investing regularly into an IRA, a 401k, a 403b, and you don't care. You shouldn't care what the market's doing. As a matter of fact, if it's down, you should be happy. If it's up, at least it's up. The other point is you will never know in advance that the market's going to be good or bad. However, if you look back at the past, you can kind of intuit, I love that word, that it's going to grow unless the economy of the planet collapses. Did I miss something?
No, I mean, I guess the only other thing would be because you can put your money in other things. Can you intuit that it'll make more than loans like bonds? Can you intuit that it'll make more than things like gold or, God, dare I say, Bitcoin? I mean, can you make that into, can you say, it kind of should. I mean, I think so because you're investing, as I said, in companies, right? These are firms. They're issuing dividends, et cetera, et cetera. So I think the answer to that is unknown, of course. But James McIntosh at the end of his article makes another statement I think we can really take umbrage with when he says even bulls should plan for lower returns ahead.
Oh my gosh, I forgot about that line.
Yeah, I mean, and it's like,
and again,
he's
now saying he knows something.
Yeah, he doesn't know. Stocks may make way more in the future.
He's saying historically they're high, but what people forget is they may be historically high now, but that's just for now. Stocks can grow into that valuation, which is one of the nice things stocks have going for them. They may be overvalued now, but generally they're overvalued because investors expect them to grow into that valuation.
And people don't know about things like productivity, for example, what that will look like in 20 years when people come back to the office. Stuff like that. They're never coming back, are they? I'm here alone, and I don't think anyone's.
You're going to be there alone forever in the cold, cold
and I can tell
office.
you why they're not coming today, because it's about 37 degrees in here. But I mean, and he looks back recently and said, "Well, the massive government deficit spending helped stock prices up, blah blah blah, et cetera, et cetera." But
yeah. We had massive government deficit spending in the 40s.
We
had massive. We've had it over and over again, and it's not. As I argued with somebody, well, I haven't yet. It'll air next Friday.
Oh.
As I argued with somebody, would it be nice if we could pay off the debt? Yes.
Sure.
There's just a lot. There are a lot of difference of opinions as to how to do that.
Yes, where would that money come from?
And what is the correct answer to that? Well, your answer may be different than my answer. Does that mean my answer's right and yours wrong, vice versa? I don't know.
Yeah, no, I'm with you there. So, I mean, the big picture takeaway, I think the two things you mentioned, absolutely right. The third one is put your money in every 2 weeks. Take a deep breath if it turns out to be the wrong day, the wrong week, the wrong year, and plan for the long term. Stock investing is long term. It should not be viewed in what's going to happen in the next month, 6 months, year, because nobody knows that. Very much so. We don't know the next 10 years, but we do know, as you said, Don, looking back, investments in stocks have been well paid. You've been well paid for taking that risk. Put it that way.
Have been. And again, we can intuit, and I think relatively accurately do that the future will look similar, barring a disaster of untold and unheard of destruction. And in that case, bend over.
Money don't matter.
Kiss it goodbye. All right, then. 855-935-8255. We do love to talk with you. We like to talk with each other, but talking with you is fun, too. 855-935-TALK.
Tom and Don are talking real money.
Do me a favor. Grab your latest investment statements if you know where they are. How many do you have? A lot? How many different investments are in each statement? A bunch? Do you own individual stocks, bonds, sector funds, and stuff you don't understand? Yeah, I thought so. I'm Don McDonald, and I'm pretty sure you have a case of hodgepodgeitis. But don't worry, it's not terminal and can be cured. But it takes three things: a bit of time, some fiduciary guidance, and a plan. There's a problem, though. Most financial advisors can't or won't provide any of those. That's where we come in. Tom and I will provide you the help you need to overcome hodgepodgeitis in a free, no-obligation meeting with an Appella advisor at TalkingRealMoney.com. So, scan or take a picture of all those pages you gathered, then go to TalkingRealMoney.com, click on Meet an Advisor, and set up a free appointment online or by phone when it's convenient for you. Let us sort through the mess and help you get started on a better, simpler future plan. Just go to TalkingRealMoney.com or call 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
Hi, everybody. Welcome back. I'm Don. Tom's there. 855-935-TALK is our phone number. 855-935-8255. Give us a call. Now, we talk a lot about money. We talk a lot about investing. We talk a lot about retirement. We talk a lot about insurance. We even talk quite a bit about cryptocurrencies. But the one thing we don't talk a lot about is shopping. We don't do a lot of shopping talk.
I'm not a good shopper.
No, but I have to tell you, while it is sometimes a miserable experience, shopping at Costco can also be kind of fun. It's like a treasure hunt.
That's what Jim Senegal, CEO of Costco, used to tell me when I interviewed him every year. Yeah,
because you find different weird things, and sometimes they're pretty cool and unique and reasonably priced and
completely useless.
Many times completely useless.
Okay, but when you think of Costco, I mean, the real deals you think are the $1.50 hot dog and drink combo. I mean, that's
gosh, that's a deal.
And I think they talked about raising it once, and Senegal said, if they raise it, I'm going to go down there and see. So they didn't. Or the $4.99, I think it's still $4.99 chicken, rotisserie chicken.
No, it's a $5.99 chicken, I think. Isn't it $5.99?
I don't know, I thought it was
Hold on. I think, but I'm telling you, that's a mutant chicken. Because you go into your grocery store and
those are usually like $10 there or more, right?
Yeah, and they're half the size because I don't know
big.
where Costco gets.
Well, they
the
do it on their own. They have their own. They
chicken.
grow their own chickens.
Yeah, but do they
somewhere in the
irradiate
Midwest.
them? Do they expose them to nuclear weapons?
I don't know what the deal is, but okay. What are we talking about? Why are we talking about?
Why are we talking? Well, because Costco has cool stuff like.
Yeah. Well, okay. If you're gonna, the other big, they sold $100 million of this. $100 million in, I think it was a quarter too. Hang on.
No, it is still $4.99.
Okay. All right.
I got to go to Costco tonight.
I know those are, and they're good.
And they're good.
But here's what I would not go to Costco for, and I can't believe $100 million worth of. Wait for it, gold bars. 1 ounce
I went and
gold
looked.
bars.
I went and looked. One of them that they had recently was very pretty.
Is it all
like
shiny and?
Yeah, well, shiny. It has
gold?
like artwork on it. I don't know.
Artwork. Okay. Yeah.
But wow. Gold coins and
no gold bars, not coins.
Gold bars, bars.
1 ounce gold bars, so $2,000 or so, right? Because that's about what
last I looked,
Yeah.
the last price I could find for the Costco gold bar was $2,099, and the spot gold price is about $2,043.
Oh, so you're overpaying at Costco?
Well, but you overpay. There's always a premium for a gold coin or a gold bar because we forget somebody has to make money off of this transaction. So if gold is $2,043, there will be a markup to buy it. And if you're selling it, there will be a mark down to sell it.
Now,
it has to be that way.
But when I read this and read $100 million in 1 quarter of gold sold at Costco, I tried. Who's doing this? Is it gold bugs? I mean,
Yes.
The article mentions somebody there saying, it's competitive and you could trust the seller. Or is it just
there you go?
That's kind of cool.
You can trust the seller.
Yeah, I think you can.
That's one of the things because a disreputable seller could have altered gold bars. It's happened.
Sure. Oh, it's happened for sure.
You put lead in a gold bar, and the weight remains relatively similar.
It's been done. Yeah,
it's been done.
But okay, so still didn't quite answer my question. These aren't all gold bugs buying $100 million worth of gold, are they? Survivalists?
There are a lot of people who, for some wacky reason, think that gold is actually a good investment, that it makes money over time, which is truly wrong. I mean, it does not. It does not over. We talked about this earlier with the stocks. We talked about stocks have returned on average over 100 years plus, according to Jeremy Siegel. They've returned between about 6.5% and 7% after inflation per year.
9 or 10.
The return of gold after inflation is about right at zero.
Yeah, no, it's about kept up with inflation. It has these periods of time where it rockets up and then does nothing.
Right,
for 20
but
years.
that's a speculative bubble.
It is. It is indeed. So I just find this fascinating. I've never had an urge to I mean, the other thing about the gold is you have to keep it somewhere, correct? Don't you have to have like a safe or something?
Okay, think about this for a moment. Your little gold bar is 1 ounce. You know, it's probably worth the same as your laptop. So you could keep it in a drawer in the bedroom.
Okay, so you don't have to have it all locked up in a big
if you
safe.
buy 1,000 gold bars, then now we're talking real money.
All right. Well, listen here. All right. So if you're thinking about this, don't buy it based on Mike. I think I pronounced this Fouligen's, president of Universal Gold and Bullion in Beaumont, Texas.
You're quoting a guy in Texas?
Yeah, he says gold coins became useful for him when a recent hurricane disrupted banking and other services for a while. When there were limits on withdrawals at an automatic teller machine, he sold small gold pieces to a local dealer for cash. This is the kind of reason why people like physical gold.
Yeah. I
thought
that's just
crazy.
You
really hate to say you know what, but you really got to, because first of all, how many people are going to be able to take your gold if there's a real problem and exchange cash for it? Not very many.
Well, my argument has always been, and this is my argument against the modern version of gold, crypto, which is exactly what they say it is. If you think gold is bad, crypto's even worse. But let's talk about why gold is bad. People are buying it as a store of wealth of last resort. basically they're saying if the U.S. economy and the rest of the world's economies collapse and their currency is worthless, I want you to use your imagination and imagine a scenario in which all currencies globally are worth nothing. That sounds pretty bad, huh?
Yeah.
If the currency is worth nothing and I happen to have a warehouse full of rice, loads and loads of rice, you want my rice. You are offering to give me a gold coin for the rice. Why would I take your gold coin? What am I going to do with it?
Yeah. You're going to have to.
I'm not going to find somebody who's willing to sell me potatoes for gold because they're going to want something of real value in bad times. They're going to want another food stuff that they don't have. I've got rice. You've got chickens. I'll trade you my rice for your chickens.
Boom.
I've got rice. You've got ammunition. I'll trade you my rice for your ammunition. I am not going to trade it for a shiny gold-colored rock. I'm not. And as far as crypto goes, you think the computers are still working?
Probably not.
Oh, Lord, people.
No. And isn't it guns, ammo, and canned goods?
That's guns, what you want. Ammo, and freeze-dried food, or canned goods.
Like
I mean, if you want to get something, at Costco,
they have that too.
Really,
they have it.
Helpful in the end of the world scenario. Do not buy their gold coins for $2,099, which is what they were. They're no longer available, by the way. They're out of stock.
It says they sell out very quickly.
They sell out very quickly. If you go to Costco. And I want to get the exact price because, let's see, what have we got here? Here you go. You ready?
How much is it? Yeah, I know what we're talking about.
No. The ReadyWise 5,400 serving food pallet.
How much?
5,400 servings of food. Would you rather have a $2,000 gold coin or $3,000 worth of 5,400 meals?
Sign me up.
Yeah, which is going to help you more in a disaster.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
This package of food even has 1,100 servings of freeze-dried orange juice. All you have to do is add water. But the one thing it's missing, this would be the perfect deal if they had, and it's all in big buckets, if they had big buckets of freeze-dried water. You just add water, and you end up with water.
You got plenty of water. Okay. I got a question for you. And don't let today's show impact it. Are you going to retire soon?
No.
I'm thinking after today, maybe. Do you know when to claim Social Security?
70.
How to create an income from your savings?
Pretty sure. Yes, I've done a class on that. So, yeah, you have too.
Which Medicare plan?
No, I'm going to have to sit down with Kevin Peterson and discuss that because I still have some confusion about that.
Housing, if it doesn't work out where you are now?
Got the silver bullet, got Stella, the Excella.
Your estate plan all in order?
Oh, hell no. Yeah. Not only no, but hell no.
So we do this little thing every year called Retire Meet. It's on February 24th. It's Don's idea.
We're going to meet a bunch of retired people?
Well, are getting close to it. So, and you can come and see us. We'll both be there. Paul Merriman, Herb Weisbaum, wonderful Weston Wellington from Dementia. It's a full day.
I love Weston. He's great.
He's great. And it includes breakfast and lunch, the aforementioned box lunch that Don is so enamored of. I should say.
No pressure, Maidenbauer, but it better be as good as in years past. There was 1 year in there where I think you farmed it out, and it wasn't as good. It was fatty roast beef. Let's get the lean stuff back. All right, thank you.
So you can get early bird tickets right now for Retire Meet at, guess what? RetireMeet.com. It's Saturday the 24th of February in Bellevue at the Maidenbauer. Join us. Retiring soon? Yes, I think I probably should. RetireMeet.com. Please come and join us for that. I think it'll be a fun day. So that work?
At least the previous 9 have been. They've been pretty good.
Very good. So show up.
Let's see if anybody's been ordering. Let's see. 1, 2, 3. Since you started plugging them, there are now 3 orders.
Okay. So Retire Meet.
You're doing quite well.
Yeah. Thank you. It's the first thing I've done well today, so I'll take it.
Here's the thing. Oh, and by the way, you forgot, you didn't mention that they still have a day to get the incredible
get the Talking Real Money mug. So this is the last day.
It's not just a Talking Real Money mug.
Oh,
it says stay calm. It's a reminder mug.
Live strong or something. Stay strong.
Stay calm and retire strong. It's a
from
message to be patient.
We stole it from the Brits.
From World War II, except it didn't say that. It said keep calm and carry on. I changed it to retire strong.
Okay, good stuff.
And it's a gorgeous, bright red mug that will get attention.
Mug.
And you can drink your coffee out of it because Tom is going to hand wash every one of them.
I'm going to bring the water. So you got
before retirement. So go to okay, I'm retiring too.
That's it.
I'm giving it all up. I'm going to go get my 5,400 meal thing. Do you know there are 2,800 entree and side servings in there?
I'll bring the water, my man. We'll have
that's all you got to do.
Big
I got the food. If you got the water, honey, I got the boxes of food.
That'll be a fun day.
And it says, get this, it says it has a 25-year shelf life.
Which is about what I've got, I hope. So
there's no 25 years left.
My goal, well, like 24 actually, but okay.
But there you go. And really, seriously, and I'm serious now. If you really believe that you want to, there's the end of the world is coming, and your choice is gold or 5,400 servings of food. Come on, really, which one should you take? That lasts 25 years. And that's all at
retiremeat.com.
Get a gun.
Isn't it?
Get a gun.
Retire Meat.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor.
Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services.
Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.